What does the Rivian IPO mean for the company's employer brand? Rivian, the maker of electric pickup trucks, IPO'd today. And it was a spectacular day on the IPO front for the company. It raised $11.9 billion in the biggest IPO of 2021. The stock opened 37% above its IPO price, and its market cap at that time was $90 billion, making it bigger than Lucid and NIO and a lot of the other hyped electric vehicle companies. And of course, with an IPO so spectacular, there's always talk of a bubble. And especially when it comes to the EV space, when you think of Tesla and its meteoric share price rise over the last few weeks even, there's always the talk of a potential bubble. But share price aside, the space is interesting to look at, and especially Rivian from an employer brand standpoint, because it really illuminates how closely tied economic performance is and momentum is with employer brand and the attractiveness of a company. One of the pillars that we have at Daggerfinn in terms of the way we score a company is industry sexiness. And of course, Tesla being the pioneer in that space has made it very cool or very interesting for the best talent to go towards the EV space. But Rivian, I think, is going to be changing the narrative in the EV space as well, adding another alternative for people that are interested in electric vehicles and sustainable transportation going forward, and that they'll probably want to go work for Rivian too. A real-time Google Trends search at the moment actually shows that Rivian jobs as a search term is plus 140%, and it's the number one search term against jobs as the overarching term. So it's outranking things like remote jobs near me. So it's very, very popular at the moment, and it's probably a function of how successful Rivian's IPO was today, that people are thinking, okay, that might be a good place to go work in. One thing to note, I think, and it's important to bring up, is that Rivian, like a lot of the EV brands, or the EV brands, is that it lost $1 billion in the first half of 2021. So none of these companies really are profitable yet. Lucid, NIO, all these companies. But that doesn't mean that they're not attractive places to go work. I think another pillar of, at least when we do employer brand audits for organizations, is you want to look at the balance sheet just to make sure that as an employee or someone considering working at a company, that you understand how financially stable or financially strong a company is, such that you're not at risk of layoffs in the near term. Companies that are losing money typically aren't great places to go if you want to go and spend a long career. But such is kind of the dynamics around capital with electric vehicles and an IPO like this. These companies have the financial flexibility or the financial leverage to really look like they're going to be growth plays in the future. So just something to think about. I think it's interesting always to think about employer brand and what it means to work at an organization, and how attractive it is to go into an industry or an organization, and how closely linked that is to business performance, for one, but with something as public as an IPO or as hyped as an IPO, just to see how intrinsically linked. I mean, the real-time search data from Google Trends around Rivian jobs being number one at the moment in the job space, I think shows just how profound that link is. If you like this video, please consider subscribing and hitting the like button, just so that you can get updates as soon as they come out.